Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's take a look at some of the stocks on the move today in Europe. I'm Lizzie Burden with Stephen Carroll, and we're joined by our reporter Chloe Melly. Chloe, I want to start with the London Stock Exchange Group because we've been speaking to the CEO this morning. It seems that investors are as upbeat as he was about the group's prospects.
Yeah, absolutely. It seems like they are, but there's also the big buyback, and I think that's also part of the reason why the shares were up this morning.
Bribery.
A big buyback of £3 billion that was announced, and also the company also raised its dividend. So the results come just a couple of weeks after the activist investor Elliott Investment Management announced that it was taking a stake in the company, and it was pushing in particular for a £5 billion share buyback program. So it falls short of that a little bit, but it is still the biggest buyback ever announced, this £3 billion buyback. And so it seems that investors are quite happy about that. Another big thing that's been happening with the London Stock Exchange Group lately has been this AI sell-off. Of course, there's some concern that LSEG could be impacted because of the data side of the business, which is about half of revenue, and AI models could technically be competing with LSEG to distribute this data and analytics. And so Elliott is also pushing for the company to show how it could stand to be a beneficiary of AI rather than see it as a risk. So all those shares are doing well today on this on the guidance, but then also on the buyback. It's still something brewing in the background with this AI thing where LSEG will have to maybe provide a bit more clarity on that.
Okay, so that's the news out of LSEG this morning. Engie's shares getting a lift today by a deal in the UK.
Yeah, it's a big £10.5 billion deal to buy UK power networks. And so as the name suggests, it is a power distribution network, the UK's largest. It was previously part of CK Group. And so this acquisition for Engie is part of a strategy to capitalize, of course, on this massive surge in electricity demand that we've seen recently, driven by electric vehicles, driven by data centers and the broader sort of energy transition as well. And it's also part of a strategy of trying to reduce exposure to activities linked more to fossil fuels, because those are a little bit more volatile, and focus instead on more kind of renewables infrastructure. And it seems that the deal is been taken as very well by the market. JP Morgan analysts said that it's not common to see a deal where the company pays a reasonable price for a quality asset, and that it results in both a qualitative and quantitative improvement in earnings. So there seems to be a lot of investor and analyst enthusiasm for this deal, and they seem to think that it's a good move from Engie to have bought UK power networks.
Finally, I want to turn to Schneider Electric. Those shares up 3.6 off the back of their earnings, getting a lift, it seems, from the boom in data centres.
Yeah, absolutely. So expecting sales and profit to rise quite a bit in 2026. And as you say, driven, of course, by data centres, which has been a big part of this Schneider Electric story for a while now. It's been one of the main beneficiaries of the AI boom because it provides things like server racks, cooling technologies, electrical equipment to data centres. And the sales actually hit a record in 2025 because of that really strong demand from data center customers, and the order backlog is also looking in really good shape. And we see that across this sector of electrical equipment providers. It's the same story. We've got Legrand, for example, another French company in that sector, had the sales in its data center segment more than tripling since 2020, and there we also had earnings coming in ahead of expectations a couple of weeks ago. In the US, we've got names like Eaton and Vertiv also having really significant jumps in orders, and that growth is likely to continue. The hyperscalers are planning a combined $650 billion investments in data centers in this year alone, and a lot of that money is going to have to go to those electrical equipments and cooling equipments and server racks, etc. And so for Schneider Electric, that means a lot of growth going forward.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.